Sandip Agarwal, fund manager and co-founder at Sowilo Investment Managers. He manages the whole PMS, but his erstwhile avatar had him tracking IT in particular very, very closely, amongst other things. So Sandip, naturally when we think of IT, we think of you. Good morning, thank you for joining in. What explains this newfound optimism at IT? You could look at it that it's playing tic-tac-toe, but the optimist will say that every single point of time that IT is being sold, it's being bought into. And a lot of commentary from sell side around how the second half might be positive as well. What are your thoughts?
Yeah, hi, good morning, and thanks for the interview. But so if you see fundamentally, and unfortunately, fortunately, we are analysts, so we always see at fundamentals. So if you see fundamentals, then this move which has happened is really surprised us, because this year, if you see the commentary of any company, and even if you take their optimistic guidance, the valuations which are there, they are not justifying the growth. The growth rates are not justifying the valuation. And I think there is something to do with our expectation that Trump has still now delivered on whatever he has said on. That means he has created at least some noise around tariff and everything. So people believe that even the corporate tax rate which he has been talking about that will come at some point of time. And if that happens, then there will be a lot of additional money which will be there with the companies, and they will probably go and invest in tech, because tech is definitely getting a lot of spends, because people want to be ahead of the curve, they want to spend. So one could be that. Second, I think this geopolitical and this Middle East crisis also push a lot of uncertainty, and because of which also maybe there would be some buying. But fundamentally, if you see the numbers, the commentaries, honestly speaking, there are no places where there are any kind of value left. Everything is super expensive. So only people who want to hide as quasi cash or dividend story, maybe because of that reason they are doing well, or maybe people are buying the index funds and there is a weightage of this stock, so they are doing well.
Okay, so I think, Sandip, the argument has been with people that we've spoken to that something like a Wipro has guided towards such bleak future and such bleak outlook on earnings that it can't get worse than that. And if anything, it might get better. So, and I guess to a certain extent, what you're saying is right. We've not seen anything materially, fundamentally change on the ground, but you are seeing a few more deals getting signed, a few more extensions of deals. Is that not enough to move the needle for you?
No, so deal momentum is good, to be honest. Last quarter when results came, everyone has given that deal number and all. The problem is that that deal number is generally very small amount of the total revenue which you have to do, because this business is like 70% is repeat and 30% is what you have to go and hunt and get new. So that momentum is good, but it doesn't suggest that there could be, let's say, a 10% growth in any of these companies. And if the growth cannot be even 10%, we are giving upwards of 20. That is 2-3 peg ratio for industry which is matured for the larger names. I don't know how do you justify that. And I personally believe that if this Middle East crisis would not have been there, or it is that they don't have good dividend, means probably it is only a hiding story which is there to call, because at this valuations and this growth, honestly speaking, very tough to buy.
I mean, I know you can't give stocks right now, Sandip, and good morning, Tamanna here, but are you long IT? Are you buying into this momentum that IT is seeing? Just give us some directional idea.
So, we have bought a lot of IT in October 2023, where there were when people started, writing of the sector, we got everything damn cheap. And we have a firm belief that the stock price is building in every negative which can happen over next 3 years. And we started, trimming off last year. So we have trimmed off everything almost in last 6 months. We don't have anything. And means the recent move of last 1 month has hurt us also, but it's fine, because we cannot have something which fundamentally doesn't justify the valuation. So across the board, we feel that valuations are very, very stretched. ER&D is a super play.
1 minute. So have you exited all your IT positions from the last 2 years?
Not 2 years, last 6-7 months, 80-90% of the positions have been trimmed.
Okay, so that's the headline there from Sandip Agarwal. Thank you so much, Sandip. So Sandip Agarwal, who tracks IT, understands the space, has trimmed 80% of his positions in the last 6 months.